Guys, we'll start the session in next 1 minute. Some participants are still joining in. So, good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. So, we'll start. We already started off the week with Nifty in a positive trend. So, we'll be discussing more of that in the coming presentation. Before we go ahead, I'd like to give a small disclaimer that any security that we'll be discussing in today's session should not be considered as a buy or sell recommendation. We'll be just doing it for educational purpose. I'll not take your much time. I'll just start with Nifty 50's action for the day. And as you can see, Nifty, the participants who were present throughout the day must have noticed that Nifty had a very flattish opening. And after that, it fell sharply at around 200 points in the first 1 hour itself and made an intraday low of 17,429. So this is what I'm talking about. After that, but what was good that Nifty made a very strong and sharp recovery in the next hour itself, and then continued to trade in a very sideways range, as you can see. And and at this moment, Nifty is still trading below the 10 EMA and the 21 DMA. And today, if one notices that the 21 DMA did act as a strong resistance for Nifty in today's session. So going forward as well, what's important is that Nifty should reclaim this key moving averages such as your 21 DMA and your 10 EMA. So when we were above that, those moving averages acted as a good support. Now they are acting as resistance on the other hand, and going ahead as well. You can see that around the 18,000 levels, Nifty found some overhead supply, and till the point in time Nifty is able to go above this point, uh, there can be some kind of supply issues and some kind of resistance for Nifty. But as this even this your 50 DMA line is moving higher. So on the O'Neill front, if we talk about it, Nifty, I mean, continues to stay in confirmed uptrend. And even on the distribution day count, two distribution days were added here on last week. So before that, the distribution day count was at one. Now the distribution day count is at three. So, and the next week itself, one distribution day count is set to expire. If going forward, if no more distribution days are added and Nifty is able to reclaim its 21 DMA going forward, then it would be a good sign. On the flip side, if you look at it, then I mean, if Nifty let goes of the 50 DMA or more distribution days are added, you might need to probably change the market status to uptrend under pressure. On the gainers and the loser front for Nifty, if we talk about it, M&M, Bajaj Finance, Adani Ports, and SBI Life was and Hindustan Unilever were the top gainers. They gained to the tune of 3.4%, 3.1%, 2.6%, 2.6%, and 2.1%. On the other hand, if you look at it, Tata Steel, Tata Motors, JSW Steel, Britannia, and Power Grid, mainly from the metal sectors. If we talk about it, metals was not in favor today, as Tata Steel went down by 2.4%, JSW Steel by around 1.4%, Tata Motors by around 1.6, Britannia by 1.3, and Power Grid by 1.1%. So, uh, sorry, the sector view chart is not updated. Uh, Sorry for this, but if we try to look at it, I'll give the disclaimer that apart from the metals and the reality sector, all the other sectors moved higher today. The metals were not in favor, and the reality was reality was not in favor, and both these segments were in negative or went down today, and the all the other sectors moved higher. On the key news front, if you look at it, Brent crude oil slipped below the $90 per barrel. PSP projects bagged an order worth rupees 167 crores. Adani Green commissioned a 325 megawatt wind power plant in Madhya Pradesh, and Dixon signed term sheet with Ibahn Illumination for the transfer of the advanced lighting solution. So let's talk about the chart of the day, and the chart of the day for us is crafts automation. So if we talk about crafts automation in terms of the Q1 FY23 results, the Q1 FY23 results was a decent quarterly performance for the company, uh, despite a tepid season, and overall value addition across divisions improved. The company expects to see a robust offtake in the CV division, driven by the MHCVs and the off-highway sub-segments, and similarly for PVs and two-wheelers. The company expects growth as supply side shortages improve sequentially. As we all know, as you've been tracking, and we've been letting you guys know that in terms of the semiconductor shortages as well, and the other component shortage has been easing. So that is a positive for the PVs and the two-wheeler segment. If we talk about across the systems or across the segments, the powertrains and the aluminum segment grew well. In terms of on a YOY basis, the industrial segment degrew by around 15%. In terms of order book, the company started supplying cylinder blocks to Daimler Brazil, and order from an American and European OEM for powertrain are expected to enter production in the near term. And overall, if we look at it in terms of the auto sector in an uptake, and with your PVs, two-wheelers, the shortage is easing out, and even your CV segments performing well, and they're in a multi-year upcycle at the moment. If you look at it in terms of the last comparing from the last 3 to 4 quarters, and as well as from the last 3 to 4 years, it's been in an uptake, and that augurs really well for the company. Now, let's have a quick view in terms of what the is there from the O'Neill perspective and from a technical perspective. I mean, the positives if we are talking about on the fundamental and the financial front can be seen in the strong EPS rating of 92. There's been good accumulation in the stock as well, and that's why you can see a good buyer demand of B plus. The group rank is really good at 28, so you can see that I mean, as a pack in terms of auto ank and the suppliers to the OEM, these packs are moving higher, and that's why you can see a good group rank of 28 as well. And the price strength is fair of 71. That's not that bad, but if you look at it in terms of the RS line has been moving higher. It's been a really good sign. And if you look at it, the stock is forming a stage 2 flat base. The stage count is also not higher. Talking about the stage 2 count, that's really good. And what you can see in from the last 3 to 4 sessions as well, that the stock has reclaimed its key moving averages, and it's just 2.59% off highs. So that's really good. I mean, that's you can see the RS improving for the stock, and when it reclaimed its 21 DMA and the 10 EMA, I mean, during this phase of the stock, uh, it did make in some big blue bars, so that was really good. Now the only thing that's left for the stock is probably this 3% to pivot that we always talk about is a clean breakout. So if the stock is able to provide a clean breakout from stage 2 flat base on an above average volume, today it did try, but it did came back to the base, and even the volumes were not there. So you can see from the average volume, it was on the lower count. So tomorrow or in the coming time, if the stock is able to break out on above average volumes, can the stock can really be tracked, and those having a potential buy watch list can keep the stock in their buy watch list as well. So thank you, and that's it from my side. And stay tuned to the space of After Hours with William O'Neill India, and do join with us on the on the morning space as well. That is the pre-bell with William O'Neill India at 8:45 a.m. sharp. Thank you, guys.